Ladies and gentlemen, good day, and welcome to Neogen Chemicals Limited Q4 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nishid Solanki from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and welcome to Neogen Chemicals Q4 FY24 earnings conference call for analysts and investors. Today, we are joined by senior members of the management team, including Dr. Harin Kanani, Managing Director, and Mr. Ketan Vyas, Chief Financial Officer. We will commence the call with opening thoughts from the management team, post which we shall open the forum for Q&A, where the management will be addressing queries of the participants. Before we commence, I would like to share a standard disclaimer. Certain statements made or discussed on the conference call today may be forward-looking in nature. The actual results could vary from these forward-looking statements. A detailed disclaimer in this regard is available in Neogen Chemicals Q4 FY24 earnings presentation, which has been uploaded on stock exchange websites. I would now like to invite Dr. Harin Kanani to share his perspectives. Thank you, and over to you, sir.
Thank you, Nishid. Good afternoon and warm welcome to all participants on the call. We are here to discuss the Q4 FY24 earnings performance of Neogen Chemicals. I would like to commence by sharing my performance, key developments, expansion initiatives, and strategy, while our CFO, Mr. Ketan Vyas, will take you through the financial highlights. Fiscal year 2024 was a landmark period for Neogen Chemicals, marking the initiation of an expedited growth journey where we laid a strong foundation to energize India's rapidly evolving EV ecosystem. To fuel our future success, we have undertaken several strategic initiatives this year, such as acquiring Bulai Chem, securing a licensing agreement with MUIS Japan, raising capital through a preferential offering, and enabling Neogen Ionics expansion with a land acquisition. The dedication and focused efforts of the Neogen family team members have been instrumental in achieving these goals, and I would like to thank them for their contribution and being a part of this dynamic journey. Moving to our performance for the year, we traversed through a tough operating environment characterized by cheap imports, inventory corrections, geopolitical tensions, and logistical disruptions. We demonstrated resilience amidst these global challenges by harnessing our agile business model and robust manufacturing expertise. That being pleased to share that we sustained increased or base volumes in certain cases by adding new customers and through cost improvement initiatives. Let me quickly summarize the key financials. For Q4 FY24, our consolidated revenue stood at rupees 200 crore, while EBITDA came in at rupees 36 crore, higher by 10% year-on-year, translating to EBITDA margin of 18%. Profit after tax stood at rupees 17 crore, of 18% year-on-year. Mr. Ketan Vyas will share more insights on the financial performance. Turning your attention to our segmental performance, in Q4 FY24, organic revenues reported a growth of 22%, while inorganic revenues declined by 53%. Both bromine and lithium raw material prices significantly declined during the year. However, we were able to maintain our performance trajectory due to higher volumes across various product categories. Now, before moving to our expansion initiatives, let me share one important development. Based on the recommendation of our board, we have filed for amalgamation of Bulai Chemical with Neogen Chemicals, as now most of the customers have registered transfer from Livent to Neogen's ownership. There are additional synergies here due to common exposure to pharma and agrochemical customers, internal use of organolithium in Neogen, and byproduct recycling. And further, this will also lead to lower administrative costs and lean and cleaner structure. Coming to our expansion initiative, we are making rapid progress in establishing our greenfield battery materials project. The plant design using MUIS technology is ready, and we have started issuing POs for activities related to construction work of the plant. Construction, including related utilities, is expected to start soon, keeping us on schedule to inaugurate this facility by second half of FY 2026. The capex of the total upcoming capacities at all sites around 1,500 crores, and I'm glad to inform you that we have already tied up majority of funds through existing bankers to fund this through project finance route. In the interim, our initial commercial capacities of electrolyte and lithium electrolyte salts will cater to immediate needs of our customer. For the 2,000 metric ton electrolyte, mechanical works is complete and the trial production has already commenced. For 400 metric ton lithium salts plant, 200 metric ton per annum is already commissioned and the first approved material has been shipped to the customers. For remaining 200 metric ton per annum, trial production has already commenced and we have started already construction work for expanding this capacity to 2,500 metric ton by end of the current financial year. We have started shipping small batches of lithium electrolyte salts to global customers and electrolytes to local customers, and the response with respect to product quality is awaited. Several domestic as well as international customers have visited and approved the facility and are now awaiting approval of the commercial products manufactured from the site. The opportunity size for both electrolytes in India and lithium salts in international markets remains promising. In addition to the PLI advantage, there are additional 7 to 8 non-PLI players who have also announced significant battery capacities to come online over the next 3 years. For salts as well, the demand for non-Chinese lithium salts remains strong and is projected to grow at a healthy pace by 2030. Presently, there are only 2-3 active manufacturers of lithium electrolyte salt outside China. Battery manufacturers, electrolyte producers want a China-free, China plus one kind of supply chain due to implementation of IRA in US and other regional policy initiatives and security of supply. This represents a potential market for Neogen Ionics, which will drive faster installation of lithium salt capacities ahead of required to support the electrolyte salt demand in India. Our growth going forward ahead will be driven by augmenting the capacities of both organic and inorganic chemicals, higher focus on CSM and advanced intermediate through portfolio expansion, expanding our capabilities in adjacent complex chemistry, including organolithium chemistry and lithiation chemistry, making deep inroads in the battery material segment and leveraging our strong R&D expertise to introduce innovative offerings. I will now conclude by saying that the ensuing year appears more promising considering the current pace of recovery. Our objective is to leverage our core strengths across various chemical domains to consistently enhance value for all our stakeholders. That ends my opening remarks. I would now request our CFO, Mr. Ketan Vyas, to share finance for the period under review. Over to you, Ketan.
Thank you, Dr. Hari. Good afternoon, everyone, and welcome to Neogen Chemicals Q4 FY24 earnings conference call. I'll take you through the financial highlights. Please note that these are on consolidated basis and based on year-on-year comparison. In Q4 FY24, revenues stood at rupees 200 crore and for FY24, it came in at rupees 691 crore. Despite substantial decline in raw material prices, notably bromine and lithium, we managed to sustain increase our base volumes as mentioned by Dr. Hari. In Q4, our battery materials also contributed to this performance through initial sales of lithium electrolyte salts. Organic chemicals saw revenue growth of 22% to rupees 169 crore in Q4 FY24, whereas inorganic chemicals reported a decline of 53% to rupees 31 crore. In FY24, organic chemicals grew by 17% to rupees 543 crore, whereas inorganic chemical revenues came in at rupees 148 crore. The domestic and export mix for FY24 stood at 73% and 27% respectively. EBITDA increased by 10% to rupees 36 crore in Q4 FY24, and for FY24 it stood at rupees 110 crore. Employee costs primarily attributed to acquisition of Neogen Chemicals and setup of Neogen Ionics. However, despite this increase, we managed to maintain our operating EBITDA for the full year, resulting in an EBITDA margin of 16%. EBITDA margin for Q4 FY24 stood at 18%. The profit after tax for Q4 FY24 stood at rupees 17 crore, higher by 18%, while the same came at rupees 36 crore for FY24. PAT performance was lower due to high depreciation and interest expenses linked to ongoing capital expenditure within the battery material divisions. We utilized the proceeds from preferential allotment in Neogen Ionics and to improve working capital and reduce high-cost debt. These actions underscore our commitment to prudent financial management and long-term value creation. Our consolidated basis net debt after including current maturities of long-term debt stood at rupees 524. The Board of Directors has recommended a final dividend of rupees 2 per share, that is 20% of the face value for FY24, subject to shareholders' approval. That concludes my initial remarks. I will now request the moderator to open the forum for Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Abhijit Akella from Kotak Securities. Please go ahead.
Yeah, good afternoon. Thank you so much for taking my questions. So the first one was actually with regard to the working capital. It seems to have increased quite significantly, one more time at year-end. So, if you could please just help us understand what the reason for this is. Is it something to do with unsold inventory at Neogen, or is there some other reason for this?
Yeah. So I think, as regards to our inventory situation, as we said, when we started this year, we were basically planning for like a full utilization of organic production and like for a long period of time. And also we saw a dramatic change in the demand on the agro side. So basically this, along with the fact that, when we acquired Neogen, there was almost zero inventory, and now Neogen business has also taken up significantly. So the combination of that have basically increased both inventories. And when we think of debtor side, as you saw that usually our exports are 40 to 50% of our revenue. And when we have exports, usually the payment terms are better, or we have factoring mechanisms which are available. Whereas when we are doing business domestically, especially generic markets, so since majority of our business in export was agro, which was impacted significantly, as well as there was some impact on the pharma business also in export market. We had to compensate that through more business in generic, which is why the payment terms are a bit longer and the realizations take longer, which is what affected the debtor side. Again, as we said, this was a very challenging year where we started with one objective and then we had to do course corrections many times to respond to the market. So over next 2 years, as we achieve full utilization levels, as some of the new products which we have made start getting approval, significant improvement, especially in terms of number of days. So the inventory that we have, the debtors we have, can support even like 1,000 crore kind of a revenue. So maybe 250 crore kind of a revenue per quarter. So we are basically aiming for that over, let's say, to achieve by end of at least next financial year, so that we are on track to get 1,000 crore plus kind of revenue from just Neogen Chemical in FY26 as we have targeted earlier.
Got it. Thank you. That's helpful. The other one was, Dr. Harin, there was this announcement by a small Nasdaq-listed company regarding some licensing deal they have entered into with Neogen with regard to battery separators. So, if you could please just help us understand what the company's thought process is on this front and whether that's an area where we intend to move forward in the future. Also, is there any synergy with our existing lines of chemistry for that?
Sure. So, this company has basically developed some technology, which basically for separator, and it's very early stage. So they just have a very small line where they make this separator. that this separator in combination with a specific type of electrolyte can give very good performance at a high temperature. So as you all know, in India, the temperatures are much larger, and most of the world, the batteries were tested only at 25 degrees Celsius. So of course, the whole world is now getting ready that, these batteries will be used in India, let's say Africa, Latin America, basically Middle East, where the temperatures are going to be higher. So this is a company which basically developed a separator which in combination with electrolyte can improve the battery performance at high temperature. So we were very keen that, ultimately as India starts first generation technology, where majority of this is basically coming from what has been tested international market, as they get into second generation India specific design, this technology, if it works at a commercial scale, along with the electrolyte design that we have for it, together can give, batteries which are most optimized for India. So, so that's the partnership. So we are using some of the trial small quantities which they have made. We are offering to all the Indian customers. So they recognize that, Neogen has a good reach for all these customers, and we can offer that combination of different separator along with the relevant electrolyte. So that combination our customers are testing. Most of them will not be used in their first generation of cells, but in the second generation. So so right now it's an exclusive distribution agreement. And if in future any customers like the design and want to use it at a commercial scale, then we also can have a potential joint manufacturing activities. But currently there's no revenue guidance which I can give. It's just a technology which can, if it works at a commercial scale in our customer trials well, then it has a potential to have a very unique offering specifically for India and can solve the high temperature issue of India. So that's why we entered into that.
Got it, sir. Just one last thing, if I may, before I get back into the queue. Two parts to this, actually. One is, now that we've commenced shipments of the salts, are the realizations we are making in line with our expectations, let's say, in the range of $20 to $30 a kilo? Is that still in that ballpark? That was one. And the other thing was just on the balance sheet. There's been a significant increase in both other financial liabilities and other non-current assets. So if you could please just help us understand what that might be due to. Thank you so much.
Yeah. So I think the realization, that is whatever pricing which we are seeing, is looking into that range. Of course, Neogen has also partly intermediate of that. So again, so some of it is an intermediate sale, some of it is a final product sales. But yeah, it is in that range what we are expecting so far. Also, some of the discussions which we are having with the international customers, which are as I said, non-binding MOUs or let's say some purchase agreements or something like that, like pricing formula based. So there also it seems that the realization remains in the range of that $20 to $30, depending. So again, and all are basically lithium linked kind of lithium linked regions. I'm not sure what you mentioned about the other financial assets, etc. Some of these are related to, I don't know if it's in a standalone, then part of it is also related to the investment which we are making, which is happening between Neogen and Neogen Ionics. So as you know, Neogen Ionics was established just last year, and we had to wait for some regulatory clearances before which some of the investments can directly be done by Neogen Ionics. So now all the future investment directly will be done by Neogen Ionics, but because of that, some of it are associated with that. But maybe subsequently, as we'll share our detailed financials with all the details and schedules, you'll get a more clarity around that.
Okay, sure. Thank you so much. All the best.
Thank you so much.
Thank you. Next question is from the line of Manish Gupta from Solidarity. Please go ahead.
Thank you for the opportunity, sir. I had 4 questions. My first question was on Neogen Ionics. There's a lot of excitement about the renewable energy opportunity in India and people putting up wind and solar. I wanted to understand, sir, that are we in discussions also with these guys for their storage requirements and whether these guys are going down the lithium route or the sodium route, and whether in our business plans, this segment is also of interest, or will our plans really be for the EV manufacturers in India?
So Manishji, for the 160 gigawatt hour guidance we had given for India's electrolyte demand, roughly around 120 of that was estimated to be EV, and another 30 to 40 was basically likely to be the solar and wind energy storage and just overall what is called as grid level energy storage kind of business. So that's been part of our plan and projection from the beginning. And this is one area where, if it really picks up, then you can have a positive surprise where, because EVs, you can say, okay, maybe 30% penetration, you have a good amount of estimate of how much, number of EVs which are going to get sold. And at a 30% penetration, you can calculate relatively quite accurately, as long as that 30% penetration number holds the the battery requirement of that. But renewable and solar is still developing field. So if depending on how fast it picks up, and it makes a logical sense that it has to pick up, if the renewable energy contribution has to increase, so then, that's where that 30-40 gigawatt hour that we estimated can go even higher. Having said that, we don't directly discuss with them. I mean, this is basically an opportunity for battery makers. And I do know that some of the battery maker customers, that the cell and the battery producers who we are talking to, that they are also seeing this traction and they are planning more and more contribution or sales coming from the renewable energy side as well. Finally, your question of sodium. Yes, there are some people who are thinking of sodium for renewable energy as a potential, but so far most of the renewable energy storage people are also considering lithium as chemistry. And some of the calculations that we have done, or what we have internally, only if lithium prices remain at a very high level, only then, the sodium will become attractive. Otherwise, most likely lithium should continue. In my view, lithium prices, the level which lithium prices have to be, it's very difficult for lithium prices to sustain that levels. So I still feel personally that lithium will be the main driving technology. However, in case if it comes to sodium also, Neogen's existing facilities with few modifications, electrolyte salt, and I think we would require almost very limited modification to make the electrolyte formulations for the sodium ion battery also. So I hope this answers all your questions.
Yes. So this answers my first question, sir. My second question was that under the US Inflation Reduction Act, there is a clause there where they want lots more local manufacturing. Is my understanding right that you can ship the intermediate of the salt and they will do maybe the last step of that, and that will qualify under the Inflation Reduction Act? Is that understanding correct?
Partly correct. Just a little clarification. So there are two criteria on Inflation Reduction Act. One says how much value addition which you have to do locally, and the second which says that what is the percentage which you can't do with countries of concern. So basically, whatever we supply, and when they make the final electrolyte there, whatever we supply will be considered as an import. So even if the final formulation is made in US, our imports will still be considered as an import at the final cell level calculation. However, as we know, electrolyte is around 10% of the cell cost, and the salt will be somewhere around 4 to 5% of the final cell cost. So at even battery pack level, it would be had to be 3 to 4% kind of a level. So because of that, that will remain into the things which you still have to import. So therefore, it is not going to create a big challenge from IRA perspective if the salt is still getting imported from, let's say, India. However, they need it from India for that non-China and non-foreign countries of concern part. So that is where basically Neogen's offering becomes attractive for a IRA compliant. Of course, ideally, they would have wished if US then it helps them with that value addition also. But that's a little bit in the future. And still, even if there is some, I think 15-20% leeway which they have. So most of the OEMs or electrolyte producers feel comfortable buying the electrolyte salt from India. So their more requirement is non-China rather than local.
But sir, I mean, I'm just curious that why would they not buy this thing from, say, Mexico, which is, and there's a lot of automotive components that are going into Mexico now. Why would they want to import this thing from a geography so much further away?
If Mexico can make at the same price as India, they can get the quality and reliability, they would prefer that. I agree with you there. But the fact today is that there is no manufacturer there. There is no person with the lithium expertise there. There is only one company which has made just an announcement that they will set up a plant in US. But again, no strong headway there. So again, from the timing perspective, from the long-term perspective, can they get everything from US? The amount of quantities that they need. So this is a tough chemistry. You require somebody who understands lithium well, do all the purification there, understanding, having experience of that. Also being able to handle fluorine chemistry. So this combination at a competitive rate, very close to China, kind of a combination. If Mexico can offer, somebody can do that. And that would be preferred over Neogen. But so far they don't have a credible option and definitely not an option which can take care of the entire US demand.
Okay. So two other small questions. One is, based on now your visibility and all the plans and the samples that you've shipped out.
Manish, sorry to interrupt you. We are losing your audio. Can you please speak to the handset?
Yeah, sorry. Can you hear me now?
It's coming a little muffled.
Okay, great. So, based on now your latest visibility, any broad guidance for what the battery chemical business could do in 25 and 26 fiscal years?
So basically the capacity that we have, right? So let's say first talk of, FY25. So when we are talking of FY25, the capacity that we have can produce, roughly around 250 and capacity we have and what we are setting up, during the year, in FY25 can do around 250-300 crores. 250-300 crore capacity is basically online. But we think that will have a full utilization level, in FY26. So in FY26, we'll have minimum 250-300 crores revenue. On top of that, the capacity which is coming online during the year and coming in FY26 will also contribute. So it will be something more than that, but it's a little bit too early for me to say exactly how much it will be. And similarly for FY25 also, we are ready to do a revenue of around 200-250 crores in current year also. But the electrolyte demand will take some time. So majority of my customers are saying towards end of Q2 or early Q3, their trial productions would begin for cell production. So that's when, the electrolyte demand would pick up. And electrolyte salt also, we are just shipping out or started shipping out some trial production in last quarter. Some will happen in this quarter. So that will start picking up with their approvals, maybe end of Q2, Q3. So you'll really see major contributions come in at Q2, Q3. So I would guess the number would be like 100 crore plus kind of a number, but little bit early for me to give you a more precise number for this year.
Yes, sir. And my last question, sir, was in our base business, have we signed up any more contracts on more downstream value-added projects?
What do you mean downstream value? There are only two things we do here. One is electrolyte salt and another is electrolyte.
So I meant the bromine business.
Oh, sorry, bromine business. We've not signed up contracts, but yes, we have initiated with maybe 4 or 5 companies, what we say early stage contract manufacturing. So as we said, we wanted to work with bigger customers. So we have started agrochem space. So we started projects with them. We have also started other 2 or 3 projects in agrochem space, new ones. One of them also is that the combination of bromine plus N-butyl lithium. So we have signed up for projects where this combination is critical. And we are also signed up with one more pharma, like two more pharma projects, but they're a little bit long-term in nature.